Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now let's take a look at price action comparisons here. Basically, markets have a really high degree of repetition. This is why technical analysis is so popular. But there's always variables that make a difference between one pattern and a next. So bull flag in one instant might, go 2 to 3 times what you risked as your stop on it. Another one might make 10, 20 times what you were risking as a stop on what looks like a similar pattern. Or a third one might give you a trigger and ultimately fail. One of the things that I did that I think is really probably what makes me so good at technical analysis is that I grew up studying to be an artist from the time I could hold a pencil or hold a crayon. And all through school I studied art. So I'm really visually oriented. I have a very simple, easy time picking out patterns. Like, people can show me their trades from the week and I can show them exactly where the similarities are in their trading from one chart to the next. And usually, people will give me 20 charts, for instance, and I can show them 7 variations of different patterns that they're drawn to and help them develop strategies based upon that. And I use that same concept when I'm looking at, how do I know where something's going to get to, or, when I see a particular pattern, when I see something develop? Here's a slide that I used back in November at the Expo, and we were looking at comparative price patterns and to help identify target levels. How do I know that a closer target or a closer support or resistance level is going to hold more easily, or a larger one's going to hold more easily? Well, you can extrapolate that from looking at past data, looking at what happened. Where did you find similar price pattern development? What a lot of people don't realize is that they will focus upon things like bull flags or bear flags. What they don't seem to pay as much attention to is the fact that price patterns are always in flux. They're always developing. They flow from one pattern to the next. If you have a certain reversal pattern, for instance, I can tell what the most likely next pattern to come is, even just looking at the initial high. So often I will have a good idea of what the next 2 to 3 patterns are, or what the probabilities for the next 2 to 3 patterns are to develop, just based upon the fact that I know how price patterns flow from one into the next. And here's an example that helped identify that target of about 78 on the dollar index. And it was looking at that euro that we looked at a couple of minutes ago. In other words, we had a breakout pattern in the euro. In this case, we're looking at a much larger time frame. This is a monthly time frame, goes back to 2001, 2002, whereas the dollar index that we're looking at here is just from basically just last year. So what you can see is that the patterns are forming and they will repeat themselves on multiple time frames. So it doesn't matter whether you see something forming on a tick chart or whether you see it forming on a monthly or even a yearly chart. The patterns will tend to flow the same. The differences are going to be in terms of how momentum develops. Momentum can often be tied to volume, that type of thing. Here we had very similar action in that we had the breakout from the congestion and then the momentum shift, kind of that V type of high, and then a sharper continuation on the breakout. And the euro actually had a 2T as well. It's a little hard to see here. Here was the first high, and then the second high, and it had a very slightly higher high. So it offered a really good example of what to look at as a possibility. And looking at the euro, we could see that, it stalled when it came back into the middle of that correction. which could have just as easily been a congestion zone back and forth. So that helped identify that same level right there on the dollar index for a target. If we're looking at, here I was able to pull up the EUI. Oh, let's see. Okay, I have no idea how to share my desktop on this platform. Oh, here we go. Let's see if it'll allow me to share. Okay, share application.
Correct.
Okay, I'm not exactly sure what this did. You guys still hear me?
Yes, we're just looking at your desktop. If you pull up Internet Explorer and go to the ISE, you'll be able to show us.
Okay. Do you see my browser at all?
Do you have multiple windows? That's the only problem sometimes if you do.
I do share application, and
I see
it minimized everything.
in your browser.
And it minimized the program too. Oh, here we go. Let me try again.
Okay.
Okay, how about now?
I see this. Oh, I see Internet Explorer right next to Outlook shortcut and sort of in the middle.
Okay, it probably doesn't like it being on the side screen.
Oh, okay. You're moving the screen. Let's see what happens. Oh, there you go.
Is that better?
Perfect, Toni. Perfect.
Okay. So, for instance, here we have the EUI, and what you can see is that back here, notice you had that same pullback, and you can see it pulled right back into the middle of that as the support level here. And this is as the support on December 18th when it came into that low. Looks like it's also corresponding to a 200-day simple moving average. So you've got two main levels of support hitting here, both at the exact same time. You've got the 200-day simple moving average. Well, I guess I can't assume this is a simple moving average, but I'm guessing it is.
I think it is, Toni.
Okay.
I think it is, but yeah.
And you also have the middle of this previous pullback, which basically translates as a previous congestion zone that kind of started back in August. And so whenever you have multiple levels of support or resistance, more things coming together all at once, it's always going to be a stronger level. And you can see, like, here's that 50-day moving average that I had on my chart. And this is where pace really comes into play too, because when you have something pacing along a moving average like you had here, where when it bounced, notice that for most of the time there was a pretty relative distance between each of these days of trade and the moving average itself. A lot of times it will hug that moving average exactly. And when you see that happen, that helps give you more of a heads up too, that that moving average is more likely to break and more likely to create, in this case, it would be the short pattern. Let me go back to my chart here now. Okay, so we use that same concept there from that euro and basically, applied it to what was happening right now in the dollar. Well, I guess not right now, but back in the November. And here again is that outcome. You can see that this is the pullback. Came right back into that zone and pulled right off of that level.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.